Albert Einstein famously called one of these the eighth wonder of the world. Here is why ignoring the other can cost you millions. What is the baseline difference between simple interest and compound interest? Category: Investing. Simple interest calculates your financial return strictly on the initial principal capital you originally deposited. Compound interest calculates returns on your initial principal plus all the past accumulated interest you've earned over time. Compounding builds an exponential mathematical snowball effect that accelerates wealth accumulation over an investing horizon. Head over to a compounding calculator link today. It will completely reframe your view of savings. Most ordinary shoppers celebrate when prices fall, but to the world's top central bankers, that drop signals a massive red flag. What is the critical economic difference between deflation and disinflation? Category: Macro. Disinflation means consumer prices are still actively rising, but at a significantly slower pace than before, e.g., slowing from 6% to 2%. Deflation is a sustained, absolute decrease in consumer price levels across the country, dropping the inflation rate below 0%. Deflation causes consumers to freeze spending because they expect prices to drop even lower later, destroying employment. Hit the like button if this short helped clarify standard macroeconomic tracking data. The United States sovereign government borrows trillions of dollars from international markets utilizing three specific debt instruments. What are Treasury bills, Treasury notes, and Treasury bonds? Category: Markets. Treasury bills, T-bills, are short-term government debt instruments maturing in under 1 year, sold at a discount with no coupon payments. Treasury notes, T-notes, are medium-term security options maturing between 2 and 10 years, paying fixed interest biannually. Treasury bonds, T-bonds, are long-term structural debt options extending up to 30 years, offering maximum yield consistency. Save this short to construct a bulletproof understanding of global fixed-income investments. Forget corporate stocks for a moment. The physical raw materials running global industrial machinery are traded here. What are the top 3 most heavily traded commodities in the entire global economy? Category: Macro. Number 1. Crude oil. The primary global energy asset driving all international shipping, flights, and petrochemical manufacturing. Number 2. Physical gold. The traditional macro secure asset sought after by central banks as an inflation hedge. Number 3. Natural gas. The fundamental heating fuel and electricity generation input running heavy European and Asian grids. Subscribe to Educo Global for daily deep breakdowns of international economic mechanics. These 3 secretive private corporate entities possess the absolute power to downgrade whole nations and trigger market panics. Who are the big 3 credit rating agencies that govern international debt markets? Category: Finance. 1. S&P Global Ratings, the largest firm evaluating corporate and sovereign financial default probabilities. 2. Moody's Investors Service, known for utilizing hyper-stringent risk modeling frameworks to score institutional bonds. 3. Fitch Ratings, the third essential gatekeeper managing broad macro risk tracking benchmarks worldwide. Look up your specific country's credit rating grade today and leave your thoughts below. Successful market pros don't hide from daily price chaos. They utilize 3 explicit indicators to measure it. What are the primary market volatility metrics utilized to gauge risk? Category: Markets. 1. The VIX, the famous market fear gauge, tracking expected S&P 500 option swings over upcoming 30-day horizons. 2. Average True Range, ATR, a structural charting indicator calculating the true historic price gaps of daily trading sessions. 3. Bollinger Bands, a visual chart overlay tracking price expansions and contractions relative to standard moving deviations. Follow to learn how to read professional charting dashboards like a seasoned fund manager. Avoid getting completely overwhelmed by long corporate earnings files. Focus strictly on these 3 lines. What are the 3 most critical operational metrics tracked inside a corporate income statement? Category: Finance. 1. Gross profit margin reveals how efficiently a company produces its baseline products before factoring in general overhead. 2. Operating income Shows the true underlying cash performance of the core business engine, separate from taxes. 3. Net income. The final bottom line. What is left for equity owners after tracking absolutely all debts, costs, and interest? Want us to analyze a specific stock's earnings statement? Drop its ticker tag below. Digital tokens are way more than speculative money. These three networks execute entirely distinct functional purposes. What are the top utility-driven cryptocurrency architectures running globally? Category: Markets. 1. Bitcoin, BTC, designed and used strictly as decentralized digital gold and a borderless macro store of value. 2. Ethereum, ETH, a global open computing layer used to execute complex programmable smart contracts and decentralized apps. 3. Ripple, XRP, optimized specifically to facilitate near-instantaneous, ultra-low-cost international banking settlement clearances. Which digital asset utility design do you believe wins long-term? Share below. This bizarre bond market math anomaly has accurately preceded major economic recessions for over half a century. Why is an inverted yield curve considered an urgent macroeconomic warning? Category: Macro. Normally, long-term bonds pay higher interest rates than short-term options because investors demand a premium for time risk. An inversion happens when short-term government bond yields pay higher interest rates than long-term alternatives. This reflects a state where institutional investors are deeply pessimistic about near-term growth, hiding in long securities. Follow to identify macroeconomic warning signals way before the general crowds do. The secret underlying superpower running the American economy isn't factories, heavy manufacturing, or technology. It is shopping. Why does consumer spending dictate the overall expansion of the U.S. economy? Category: Macro. Personal consumer spending accounts for roughly 70% of the complete United States gross domestic product. When consumers get fearful and freeze budgets, the velocity of money stalls, causing an immediate slowdown. This is exactly why governments issue direct economic stimulus checks during recessions, to force rapid retail spending. Review your own financial budget allocation today. Are you consumer spending or asset investing? Why did 30 years become the universal standard timeline required to buy a house across the globe? Where did the 30-year fixed mortgage come from, and how does it balance risk? Category: Finance. It was popularized in the United States during the 1950s by government initiatives to make housing affordable after World War II. It stretches payments to match an individual's working lifetime, lowering monthly payment sizes relative to income. The hidden mathematical reality: over a 30-year horizon, you frequently pay more in compounding interest than the house cost. Share this short with someone currently browsing the housing market or evaluating loan rates. How can you determine if a stock is an absolute steal at $50 or wildly overvalued at $5? Here is the metric. What is a P/E ratio, and how do you establish an analytical market baseline? Category: Investing. The P/E, or price-to-earnings ratio, measures a stock's market share price against its annual net earnings per share. Historically, the broad stock market average P/E ratio floats within a baseline window between 15 and 20. A P/E above 25 signals elevated growth expectations, while a P/E under 10 tracks undervaluation or corporate trouble. Look up your single favorite stock's current P/E ratio right now and share it below. Wealth advisors love to boast about beating the market, but long-term history proves consistency beats genius. What is the long-term average historical return of the broad stock market? Category: Investing. Over the past century, the S&P 500 index has delivered an average annual return of approximately 10%. When adjusted for long-term historical inflation, the real net purchasing power return hovers around 7%. At this historical trajectory, using the rule of 72, your invested capital doubles roughly every 7 to 10 years. Subscribe to grow your personal financial net worth via steady, data-proven methods. A stock offering a massive 15% dividend yield looks incredible until you analyze this one critical percentage. What is a dividend payout ratio, and how do you locate a safe corporate threshold? Category: Investing. The dividend payout ratio shows what percentage of a company's total net profit is paid out to shareholders as dividends. A payout ratio tracking between 30% and 60% is healthy, leaving cash to protect and grow the business. If the ratio breaks past 80%, the company is spending almost everything, making a dividend cut highly probable during a slowdown. Follow Aduco Global to easily spot toxic stock yield traps before they damage your income portfolio. Elite central banks print billions in digital fiat money daily. So why do they lock heavy gold bars in underground vaults? Why do modern sovereign governments maintain massive gold reserves? Category Macro. Gold functions as the ultimate historic financial insurance policy against inflation and geopolitical currency warfare. Unlike paper or digital currency, gold cannot be created out of thin air by corporate policies or political mandates. It balances bank balance sheets, ensuring international trust and collateral liquidity during global structural panics. Do you hold any physical precious metals in your portfolio? Let us know in the comments. Top commercial real estate investors don't care about beautiful design. They focus on this specific yield percentage. What is a cap rate, and what represents a healthy real estate investment target? Category: Finance. Cap rate stands for capitalization rate, measuring a commercial property's natural annual return potential. The calculation is simple. Divide the net operating income of the asset by its total market purchase price. Historically, a cap rate hovering between 5% and 8% represents a normal, balanced market risk profile. Save this short before evaluating your next residential or commercial real estate deal. Why must a corporate entity in Europe exchange their local euros into US dollars just to purchase crude oil from the Middle East? What is the petrodollar system, and how does it guarantee global currency dominance? Category Macro. It traces back to a strategic 1974 agreement where Saudi Arabia agreed to price all crude oil sales exclusively in US dollars. In exchange, the United States government provided deep military protections and advanced weapons systems to the kingdom. This setup forced every nation on Earth to accumulate massive US dollar cushions simply to keep their industrial fuel lines open. Do you believe the petrodollar architecture will survive the upcoming decade? Share below. Why did this exact percentage become the global standard requirement to purchase a home without extra penalty fees? Why do retail banks ask for a 20% home down payment buffer? Category: Finance. It establishes a safety margin for the bank, protecting them if home prices drop and you default on the loan. If you supply less than 20%, banks require you to pay private mortgage insurance, PMI, to offset their extra default risk. Supplying a 20% down payment reduces your monthly liability size and avoids wasting cash on ongoing mortgage insurance. Drop a comment below. Is a 20% down payment threshold realistic in today's global real estate market? There is a hidden mathematical volatility score attached to every single public stock on Earth. Here is the baseline. What is beta in equity analysis, and how do you read its index? Category: Investing. Beta measures a specific stock's price sensitivity relative to the broader market, which possesses a standard baseline score of 1.0. A stock with a beta score of 1.5 moves 50% wider and faster than the market, tracking higher risk and upside. A beta score of 0.5 indicates massive price stability, moving half as wide as the index, common for utility firms. Look up your single largest stock holdings beta score before the next market correction arrives. The global stock market faces devastating recessions, panics, and geopolitical wars, yet its long-term chart always trends up. What fundamental economic forces drive the long-term upward trajectory of stock indices? Category: Investing. 1. Human innovation. Corporations continuously create new technologies and operational methods to expand revenue efficiency. 2. Aggregate demand. A growing global population creates expanding baseline markets for goods, energy, and corporate products. 3. Survival design. Stock indexes automatically drop dying businesses and replace them with rising market leaders. Hit that subscribe button to join Aduco Global and structurally master your financial net worth.